quickly as possible. So I'm hoping you're seeing something that says financial planning topic, advisor, and investment fees. Raise your hand, click your raise your hand button if that's what you're seeing. Thank you. So if you're joining us now just in this topic and you're seeing now financial planning section of this discussion, first of all, you can always go back and look at the full webinar, weekly webinar. You can sign up for our weekly webinars on our website. And there's a link in the description in the YouTube description. And you should also subscribe and like and hit the notification bell so that you stay on top of the YouTube videos because we do a new financial planning topic nearly every week. I don't miss many. So this week we're going to be talking about advisor and investment fees, and I'm going to just share with you that I just started plotting this out, and there's just a lot here. So let's talk about some of the questions you should ask. Some of the questions you could ask someone like myself or someone that you're considering working with. What are all of the fees? What are all the advisor fees? So we have a really simple platform here. Let me just find my fee schedule. It's here somewhere. Let's see. I'll just blow this up if I can. Why isn't that getting bigger? Okay, so you can see that this is the updated fee chart here. Let me just close this. So, we started $1 million. Typically, we don't work with clients under $1 million. We have resources for that, but from $1 million to $2 million, you can see here, this is the assets under management. We use primarily the assets under management fee structure. So for most people, they transfer their accounts to us. We handle all the investments and transactions, and they pay us a fee for that. And that includes comprehensive financial planning and tax efficient planning. So these are our tiers. I don't want to go into what we're doing much. I just want to talk about what you should be asking. But $1 million to $2 million at 1%, $2 million to $3 million at 0.85, 3 to 4 at 0.75, 4 to 5 at 0.65, and anything above usually lands around 0.55%. It depends on the structure and the planning and everything else involved. And then we'll also entertain just flat financial planning. And sometimes we just help folks. So we'll charge somebody a flat fee just for financial planning. If someone says we want to handle everything ourselves, we just want you to do the plan and we'll handle the implementation, and then the implementation's on the client. And then some people say, I have my plan, I want to implement it myself, but I can't find something that is principal protected that fits into my plan. I need help finding the proper life insurance policy, and we can help with that. But most people, 90 plus, probably 99% of the people hire us all in comprehensive asset management, comprehensive financial planning and investment management. But you should be asking, what are all the fees, right? So I just showed you, that's really simple. And then if we do break it down where we just have, if someone comes in and they have, they say, we want you to just handle the investments, but we don't just do that. But we'll if they're below $1 million, we'll help them with the investment, and we'll charge a financial planning fee. And we have 2 separate agreements because I want clients to know exactly what they're paying for each portion of the services. So what are all those fees? The average in the industry is probably somewhere between 1 to 1.5%. But honestly, most companies are only giving you investment management for that. So you've got to ask them, well, what am I getting? Am I getting, if I pay you 1% or 1.5% to manage my accounts or manage my retirement, help me put all this together, what am I getting? So what do you get for these fees? And most people, again, they'll charge you 1 to 1.5% for just investment management. You should be asking, does that include tax planning? Or financial planning? Does it include tax planning? Does it include tax preparation? I get that question often. We don't do tax prep. We do a lot of tax planning. We have great resources for tax preparation, but that is not something that we include in our fee. So clients pay, probably anywhere from $500 to $2,000 a year in addition for their CPA. I believe you should be working with a CPA to be doing their tax preparation, depending on how detailed it is. It could be, obviously more than that. Financial planning, listen, our minimum financial planning fee is $5,000. It could range anywhere to $25,000. So you've got to understand these fees. Again, if clients are working with us with comprehensive and they're over $1 million comprehensive, the comprehensive agreement, all of these things, right, are included in the 1% or whatever their fee structure is, but that's not true with everyone. So you've got to ask these questions, what's included? And we're going to talk more about investment management, financial planning, tax plan. And so the reason you need all this information, because what if you have $1 million, right? And you're paying 1%. Well, we know that's $10,000 a year. At the end of the year, you should be determining, well, what's the value of this versus the cost of it? And again, I always have this discussion with new clients. You know, I want you to, if you're not receiving tremendous value or the fees that you pay us, we shouldn't be doing business anymore. And it never comes up again. We always share our fees. We send out, billing reports. It's in the performance reports. Our performance reports show net of fees. But that makes me feel good because clients always ask about it in the beginning, and you should, but it never comes up again on their end. We remind them, of course, what they are. But you've got to be able to determine that value versus cost, because I had a person one time and she had about $1 million that came to me after a class, and she was with another firm. And she said, I was talking about fees. So she's talking about her advisor and the work he does for her. And I said, what does he charge? And she said, he charged me a $500 annual financial planning fee, and that's it. And I said, that's really, really unusual. And she said, he's very courteous about it. In fact, he just contacted me and said, is it okay if I take my fee this month? And I said, that's it? That's all you pay him? And she said, yeah. So I started going through her statements, and sure enough, there was another fee, right? So she had $1 million, and there was a 1.5% asset management fee. So she wasn't paying $500. She was paying $15,500. Now, forget about disclosure for a second, right? That's inappropriate, I believe. And maybe he did disclose it to her and she didn't understand, but she should understand that she's paying $15,500 a year, because then she can evaluate the value. She might say, well, geez, I appreciate the financial planning he does. I appreciate the comfort it brings, knowing that I have somebody available there, because it's not all technical stuff, right? We work very hard on the technical side to make sure everything's right and we're getting the best value all around for you and the best investment returns and protections that we can. But there's also just that comfort knowing that somebody's looking out for you, right? There's a lot of value to that. He might be doing tax planning, but she had no idea. She just thought that she had like this sale price of the decade of somebody working to help her manage her retirement plans. And by the way, she showed me a financial plan. It really wasn't a financial plan. I have to do a whole other discussion about that. Most financial plans are just what we call an asset gathering tool. That's how it's taught at the big firms, but it really wasn't a financial plan. So, but she thought she had this great big value of financial planning, investment management, retirement planning at $500 a year, but that really wasn't truly the cost. So she had no way of evaluating that value versus cost. So then that's just the advisor fees. Now you got to get into the investment fees and costs. So this is where the list gets kind of long. So the most common type of investment are mutual funds. So here's what I did. And we're going to go a little longer. Just stay with me if you can. So I went in, hopefully this stays. You should see, this is a research page, really, really simple research page from my custodian, Charles Schwab, one of my custodians, Charles Schwab. So you'll see these are some common funds. So just raise your hand if you see that, the Charles Schwab page, and there's just a list of mutual funds there. Thank you. This is none of these are recommendations, right? These are examples. They're not recommendations, but this is what you have to pay attention to. These are the questions you should be asking your advisor. What are your fees? What are investment fees? Because I want you to just take a look at this first one, for example, right? This isn't highlighting well, but this American Century fund. Now, again, this is not it's not in our, we don't use this fund, but I'm not saying you shouldn't. I'm not saying you should. This happens to be an A share class fund. That means it has a front end load. I'm over here, right here, if you can see me. Let me grab my pointer. All right, I'm over here. So it's got this front end load, 5.75%. So there's breakpoints in there. You can pay anywhere from 5.75% to purchase it all the way down to, probably 1%. And this still goes on. There's been a lot of changes with fee structures, but this still goes on. I just had a new client who has some A share mutual funds. And I said, well, listen, you just paid 5.75% to purchase these funds. I kind of want to let you leave it where it is for a while. We'll keep an eye on it for you, but I don't want you to get out of that and then have to pay an ongoing fee. We charge, we don't charge an upfront fee. So it doesn't make sense because, then the internal expenses are right here. So you got the 5.75% and then the fund call, make it more confusing. The gross expense ratio is 1.5%, but the net expense ratio, sometimes mutual funds give fees back, make it more confusing, right? Is 1.8%. And then they have these 12B1 fees, which are ongoing commissions to the custodian or the broker, right? So I'm just showing you how confusing this could be. Now that's an A share class fund. Here's a institution, this I share class fund. I'm 3 down here, MFS, for example, again, not a recommendation. You'll see that they have a gross expense ratio of 1.5% and a net expense ratio. Let me explain expense ratio on a fund. Expense ratio is what it should totally cost to operate that fund. There are potentially some additional other small charges beyond that, but this fund, for example, would cost you just about 1% to own that fund. There are no additional 12B1 fees. And it really ranges here. You'll see, so here's some ones. 1 is very common. You go down here, you see 0.7. I can sort this. Let's see. Yeah, forget that. This isn't accurate. 78.92% expense ratio. It may be stated, but there's certainly some givebacks on that. So here's an expense ratio, a gross expense ratio of 5.6%, and then a net of 1.89. And yeah, here's an example. So even if their gross is, that's got to be an error, but their net expense ratio is 1.3. Let's just search it here. Let's see the highest net expense ratio. Yeah, 7.62%, 3.67, 3.43. You can see where these can get really expensive. And now if I search it this way, you'll see, hopefully we go on the lower end. Yeah. So if we go on the lower end here, and you shouldn't just buy it based on the expense either. This is the value versus cost question. And that's another question you should be asking your financial advisor. If the financial advisor says, well, I want to use the fund that costs 5% a year, there better be a really good reason for that. You'll see some of them are as low as 0.10, 0.14. So you can get some low cost funds, but that doesn't mean quality. So I share this with you because, as I said, it can get a little confusing. Now, and this is why you should ask your expert the question, and he or she should be really, really open about sharing that. Now, let's look at it before I move on to the Fidelity Freedom Fund. Let's look at an ETF. So an ETF, an exchange traded fund. This is a really common fund, exchange traded fund. This is a Vanguard S&P 500 fund. Exchange traded funds trade differently than a mutual fund. I like exchange traded funds because of their low cost and their efficiencies, but again, not a recommendation to purchase it. But you can see here, the expenses of owning this exchange traded fund are 0.03% compared to probably on average somewhere between 0.7 to 1%. So the mutual fund that, and just give you some insight, when you're talking to your advisor about the cost of the funds, if I have a mutual fund in a portfolio that's got an expense ratio of 0.7% or 1%, I'm going to have a very good reason for having that in there. And it's either that they perform well during down markets, or perform well during up markets, and they can't be beat by something as passive. This is a passive investment, the S&P 500 Vanguard fund, because you don't get any sophisticated or manager input at 0.03%. Hope that makes sense. Again, I know it's confusing. Let's look at the Fidelity Freedom Fund as another example. So these target date funds are really, really popular. This is right from Google Finance. So while you could probably go into Schwab research actually, but you can see here, I just Googled this and pulled it up, and the expense ratio is right here on the right, 0.75%. So these are relative, I would say that's a relatively expensive fund in the scheme of things, but this is very, very popular. People buy these in their IRAs, they buy them in their 401ks all the time, and they often don't know the expenses. And by the way, ask your 401k provider what the expenses of your investments are, because that's important. All right, just one more. Let's see. I have I think we already looked at this. Yeah, the Vanguard 500 index, and this did not have on here the expense ratio, and that's why I took you to Schwab. All right, so lots of questions to ask about the costs of investments. We talked about mutual funds, we talked about ETFs, exchange traded funds, and you saw the difference there. Now, what about individual stocks and bonds? Well, typically there's no cost to owning an individual stock. That's where the portfolio manager, if your advisor is working as a portfolio manager to put together individual stock and bond portfolios, that's where you may pay a little extra and above the 1%, or maybe that's part of the 1% fee that they charge you to put together that portfolio. So a good answer would be, well, I charge you 1% and that doesn't include finance. This is not me, but someone might say, I charge you 1% and that, while that doesn't include financial planning, it includes a customized portfolio strategy that we put together that includes individual stocks and bonds. And this is why I believe that's a better approach. So again, you have to see if that's a value for you. I don't put together individual investment, individual stock and bond portfolios for my client, because I don't believe that a financial advisor like me, who's meeting with clients all the time, can really dedicate the time that's needed to manage a portfolio like that. So I'll use investment managers, I'll use exchange traded funds, but there are plenty of people with, my focus is on the planning. There are plenty of people whose focus is on the investment side, the investment individual bonds and stock side of it. Again, I'm very, I think we're very good at finding the great managers to fit in there. Some people want to manage it themselves. And then the investment managers, the managers that we want to bring into the portfolio, we have to evaluate the fees, and you should ask what those fees are. If I say to you, I want to bring in Vanguard, as an investment manager, you've got to understand those fees, or at least you should ask what those fees are, because again, you should be able to check in on the value of the cost versus the value. Then you have custodian fees. So this is something we moved away from, thankfully, from our Fidelity relationship, but it used to be every year there were IRA fees, and then there became statement fees and all these fees that Fidelity charged. Well, our new custodian doesn't have those fees. I'm thankful about that, but there are some trading fees. So every now and then we'll have a mutual fund that will get charged, $5 or $20 to trade within Schwab. So all these things add up, and you should know generally, or you should be asking the question, and your advisor should be able to quantify the value of the fees that he or she charges, and that's built into the investment process. All right, folks. So we're a little over. We're almost at 11 o'clock. I hope that was helpful. Looking forward to seeing you tomorrow night for our special webinar with Alicia, talking about long-term care planning, and next Tuesday again on our weekly webinar. Thank you. Have a great day.